Uganda has scored an overall average of 52%, owing to, among others, healthy hard currency reserves, as ranked by the African Financial Markets Index report produced by ABSA and partners.
To have the external investors, institutional or otherwise, looking in and evaluating our potential as a country or as a continent, it is also very necessary, especially for Uganda and our performance in this index on this particular dimension of capacity of local investors, I think that was pillar 4, to have the index be able to speak to the local investors and help them understand and build their own internal capacity to be investors within the economy.
And what it is that we are struggling as far as the level of money supply and GDP is concerned. I think in more advanced economies, you find that money supply is 100% of GDP or more than 100% of GDP.
However, the report suggests that Uganda's unfriendly tax systems on dividends compared to regional peers could be impeding the financial market development.
Is the policy around attracting investments, the fact that it takes longer to invest some of the companies, it's around raising capital, it's around companies not being able to raise capital, especially on the stock exchange, because of the issue of transparency.
To me, the remedy is in building alternative markets for SMEs. These SMEs, we need to build markets which act as incubators, for them, and start with reducing the informality in them.
The ABSA African Financial Markets 20-country index measures countries' openness and competitiveness based on 6 pillars, such as market depth, access to foreign exchange, transparency, and capacity of local investors, among others.
But our sense is that probably the third quarter was a low point. We don't expect the fourth quarter to have been a sharp recovery when it comes to growth rates, but we feel confident that into 2020, we should start to see at least a modest recovery from those lows. Some of the broader drivers, of course, are going to be around sort of the oil economy.